Welcome to Ideas of India, where we examine the academic ideas that can propel India forward. My name is Shruti Rajagopalan, and I'm a senior research fellow at the Mercatus Center at George Mason University. Today, my guest is Amol Agrawal, who is the author of the recent book, History of Private Banking in South Canara District, 1906 to 69. He teaches economics at Ahmedabad University and blogs at the excellent blog Mostly Economics. We spoke about the colonial and post-colonial history of banking in India, the unique features of South Canara district and its bankers, inclusive banking by state and private banks, bank nationalization, and much more. For a full transcript of this conversation, including helpful links of all the references mentioned, click the link in the show notes or visit mercatus.org/podcast. Hi Amol, welcome to the show. It is such a pleasure to have you. I have been a fan of your work for so long.
Hi, Shruti. It's an absolute pleasure to be on this podcast. I've been hearing you and the podcast for such a long time. And, I'm a bigger fan of your work and how you go about, getting all these guys around and talking about them and taking thoughts on the podcast.
It's all thanks to folks like you who actually write really good papers and books. The book is right here. I'm talking about the history of private banking in South Canara District, 1906 to 1969. So it kind of ends with bank nationalization. But before I get to the book, I also follow you on your blog, which is a prolific blog, one of the few I actually go to and actually read very frequently. I want to pick your mind as not just a historian of the banking system in South Canara, but you also know a lot about the banking history of India. So before we get to South Canara, can you tell me about the kind of private banking industry that we've had since, let's say, the mid-18th century or something like that? Most people, they call them money lenders. It's indigenous banking, informal banking. I hate all those words. You probably know why. Because the idea of this formality versus informality is completely like a colonial idea. But at that time, we had the famous Oswal Jains from Nagaur in Rajasthan. This is the famous Jagat Seths. We've had Surat Sarafs. We've had Multani Sarafs. We've had Natakote Chettiars. And then, of course, we've had private banks in Bengal, which are sort of modeling themselves around the British banks that come in. And then finally, the South Canara region, which you document so well. Can you just walk us through, take as much time as you need, but sort of this long arc of private banking?
Yeah, okay. This is really a big question. In fact, I did a podcast with Pooja Mehra on the private banking evolution.
We'll link to that.
Just to summarize it in the time, 1770 is when we have the first records of banking in terms of Bank of Hindustan. After the 1757 Battle of Plassey, the agency banks come up. So you have these managing agencies and they see that India is not like the other colonies where you don't have people. There are places in which there is already business and so on. All they have to do is to start setting up enterprises and start trading. And when you start trading, you start, thinking about finance, and the British start coming in here. Salaries have to be paid. Salaries have to be remitted back home. So you start thinking about banking institutions. There are records by Amir Bakshi. In fact, there's a very promising person who could be on your podcast in future who's working on Parsis in banking, history of Parsis.
Fantastic.
He's a Mumbai University student. I just met him. So he gave me some records. In fact, I told him about your blog. So I'm also parallelly pitching in your blog to other people so that they come and talk because it's such a fascinating platform.
You're so kind.
He showed me some records about some banks being there in 1720 and all that. Now there is Amya Kumar Bakshi's work and other works which do suggest that banks existed before 1770, but the RBI Museum and whatever recorded history we have, the Bank of Hindustan is where we know that banking typically starts. We have records in the RBI Museum of that. A couple of these banks start setting up in Calcutta because Calcutta is where things start right then. 1799 is when you have battle with Tipu Sultan, the final one, in which there are major losses. And just like Bank of England was set up because of these Anglo-French wars, the British got this idea that you need to set up a bank in India too, in order to finance wars and so on and so forth in future. 1806 is when the first Presidency Bank of Calcutta comes up, which is then converted into Presidency Bank of Bengal in 1809. So once this Presidency Bank comes up and you have some of these managing agency banks, Calcutta starts to become some kind of a hub of banking. Rabindranath Tagore's grandfather, Dwarkanath Tagore, set up a bank, Union Bank.
Yeah.
So accordingly, there were some of these guys who come up and they set up these kind of banks, largely in partnership with the British, because at that time you didn't really understand the banking system. And as you said, the indigenous banks and money lenders, they've already been here. So British are trying to understand what's going on here, and then they call all these agencies, which are Indian agencies, as indigenous banks, and whatever is set up on the British line as some kind of joint stock or commercial banks. And then Calcutta, there is the jute market starts to pick up here, and there's a shock, like all commodity shocks, and some of these banking setups are not even set up on the right kind of prudent banking norms as we understand today. So the capital norms are not there, and so on. So a lot of these banks closed down. Then 1840 is when the Bank of Bombay comes up, just like the Presidency Bank, another, and then 1843 Bank of Madras comes up. By then, Bombay is gradually shaping up as one of those commercial hubs, and the British are also trying to shape it in some way. 1861 is when the Civil War in America starts, and the cotton boom shifts from US to India. And again, a lot of banks come up in Bombay at that time just to facilitate this kind of trading. And then the Civil War ends, and the cotton boom in India ends. And just like all the other booms, the banks also collapse here. And we have this very famous, very quickly, the old Bank of Bombay is closed down, and a new Bank of Bombay set up by the British, because Bombay by then had become a very important center. There was some interest in banking, but it kind of recedes because you see large number of failures and so on and so forth. That's what Professor Divendra Tripathi in his business history book has been telling us, that there was a general lack of interest in banking. Then we have in 1880s Allied Bank of Shimla coming up. 1894, 1865 is also the oldest bank, Allahabad Bank, which comes up. 1894 is when we have Punjab National Bank, which is like the first Swadesi kind of bank, which is basically set up by the Indian nationalists. No partnership, nothing, and set up in Lahore at that time. Then we have the Bengal Swadesi movement, where the Bengal Swadesi movement 1905 leads to this interest in Swadesi capital, Swadesi businesses, and Swadesi banking. So that's also the period where the first set of South Canara banks come up, 1906. And there is a big rush for banking. Punjab and Sindh Bank comes up at that time, Central Bank of India. But so all these kind of big banking entities start to come up. Some of them also fail. All this while the British are just interested in the presidency banks and not worried about the general banking in India. But there are some large scale failures in Punjab region at that time in this, after the Swadesi movement gets petered down. And 1913 is when the British start to first time document the state of banking in India. There is a publication, Statistical Tables related to Banks India, which still continues till today. That is set up in 1913. That gives us some understanding of the number of banks in the country, what kind of capital they have, what kind of deposits they have. Then gradually, this is done under the government at that time, so we start getting some information about the state of banking in the country. 1921 is when these three presidency banks are merged into an imperial bank, which goes on to become State Bank of India when it's nationalized in 1955. So in this kind of a period, what we are generally seeing is that there have been waves of bank rises and bank failures. Again, we see the same kind of story. In 1920s, discussion around RBI starts to come in after the Hilton Young Commission, and then the British also set up Central Banking Inquiry Committee. So the Central Banking Inquiry Committee is basically to understand the banking developments in British India. But then parallelly, what happens is that some of these princely states like Baroda and so on and so forth, they also set up their banking inquiries. And that also acts as a ready fodder for us to understand what was banking like in some of these places. 1938, RBI comes in, finally RBI established. So the banking kind of developments move from the government to the RBI. And once RBI gets a handle of it, RBI realizes that there is no formal definition of banking. In all this while, even though British are documenting the number of banks, there's no definition of banking. So first time RBI defines a bank. So the British kind of, before RBI, the banks are divided into two categories. A category banks are those with capital more than 5 lakhs, and B category is less than 5 lakhs. When the RBI comes in, it realizes that A category it's not necessary that if your capital is greater than 5 lakhs, you are a safe bank. And then RBI Act has a second schedule under which the good banks will be part of the second schedule. So RBI starts to clean up the banking system. And in the B category banks, now you have B, C, and D. It says that capital less than 5 lakhs to 1 lakhs, 1 lakhs to 50,000, less than 50,000. Less than 50,000 are D category banks, which is a very small bank. So the British were not really collecting all this data. RBI comes in and you see a significant change in that publication which RBI is publishing, and you suddenly see expansion of number of banks. And you have banks all around the country, very small banks in the south, loan banks, loan offices in the east. So there are all these different nomenclatures of what we call as banks. And then 47 is when independence happens, and 49 is when Bank Regulation Act comes in. Now, before Bank Regulation Act comes in 1938, we have this major bank failure, Travancore National Full-on Bank, where RBI realizes that it does not understand banking as much. It understands banking, but it needs a separate regulation because RBI Act, based on Bank of England Act, did not have adequate regulatory power. So the discussion started to kind of have a separate banking regulation act happened, and 1949 is when the Bank Regulation Act comes. When Bank Regulation Act comes in, RBI starts to clean up the banking system much more firmly. Before, in 1935 to 49, it's up to you whether you want it to be supervised. RBI couldn't sort of force you to supervise, but after that, it became every bank had to be supervised, and then RBI starts to clean up the system. So between 1913 to 1960s, we see about 2,000 banks failing, merging, liquidating, and all kinds of things are done. After 1949, another major event which comes in is the Palai Central Bank fail in 1960. Again, a Kerala-based bank which fails. At that time, despite RBI's best efforts, the bank failed. So RBI decides, and at that time, you had no choice but to liquidate the bank, right? And the depositors then had to wait for a long time. So then RBI worked around an arrangement at that time, which is used in the banking system today, where you put all these banks under this protocol where the deposits are frozen. The depositors can only withdraw some 5,000, 10,000 rupees based on the balance sheet. And then the RBI tries to find somebody who can buy the bank and as a result stabilize the bank. So banking is all about history, about sort of understanding this long connect. So then we finally come to 69 is when banks are nationalized.
Yeah.
And that's a major turning point.
Before we get to the modern part of it, nowadays we have a very interesting banking system where there's a lending function and a deposit function, which is necessarily under the same umbrella, right? That was not the case before. There were
Yes.
money lenders who lent, and these were typically rich landlords, or they were sometimes even relatives of monarchs and things like that. Then there wasn't much of a deposit function. There were things like chit funds, but the chits were relatively small portion of the market. And then the largest portion of the banking function was seniorage, because each bank was essentially issuing its own notes and its own currency. When I think about the history of banking, especially after the East India Company, the way I think about it is the deposit function was never really that important. So they just kind of left it to chits and indigenous money lenders. The lending function was very important, and the Indian bankers were making a killing lending to the East India Company to finance wars. So that was one impetus to start banks so that, they could actually finance their own wars. And the even bigger function is the seniorage function, which is the East India Company very deliberately starts spreading rumors and talking about debasement that's taking place across the different sarafs and different private banknotes and coins that are issued in India. This is happening in the early 19th century. Somewhat. Is that a good way of splitting this up? Like thinking about that, the deposit function really only comes in post-independence as a very important banking priority. And before that, these things are quite separate.
Well, that's a very, very interesting question. In fact, I've been thinking about it. And as you rightly said, you earlier had these titles like banks of deposit. You had loan offices, which were specifically looking at. And obviously, the deposit activity was never really paid much attention to, barring British remittances, and that's just a transfer function. But that concern for deposits was never really there. It was mainly around loans. It's only when the nationalist movement starts to pick up, and you realize that you need to also channelize these deposits, is when you start thinking about banking as also a deposit activity, which we also I explain in my book how all these South Canara banks were largely focused around deposits and so on and so forth, because they understood that this is the way through which we can kind of finance Swadesi movement and so on and so forth, and the Swadesi enterprises. This whole idea of looking at bank as just a silo thing where both deposits and loans are there, this is not how banking has kind of originated. And yes, we've had all these banks which issued currency notes till before 1861. You could pretty much issue your own. Then you have the Paper Currency Act, which unifies the currency thing. In fact, the presidency banks also used to issue their own currency, which used to act as a seigniorage for the East India Company. And then once the Paper Currency Act comes in and this currency function is unified, so it's an interesting thing that in the presidency banks also what they do is that before this the branches were not allowed. After 1861, you allow these presidency banks to set up branches because the idea is that the the liability of which the banks which mainly comprise currency, since that currency is now taken away by the government and deposits were not really there, so the government decided that it will deposit its own money in some of these major centers of wherever they set up these branches. So all these presidency bank branches were set up in
Yeah.
these major trading centers, major commercial centers, major political centers where the government had either some political center or something where the government could deposit in order to let the bank
Yeah.
function. There are obviously all these very interesting changes which have happened over a period of time, that from a loan focus to bringing deposits into the picture. We are seeing this very interesting picture in Indian banking today, that the deposit growth is lagging behind the
Yeah.
loan growth, and there's a lot of discussion around it.
So this also brings me to the idea of what comes first. When I was reading your history of South Canara, normally one would think that industrial development comes first and banks follow industrial development, because the moment you have industry taking
Yeah,
off, you need people. I mean, it's a fairly long production chain. There is trading activity, so you need people to actually lend money for a short period of time and then pay it back and so on. And banks come in to serve that particular function. And when I was reading your history of South Canara district, I figured that what happened in that region alone is sort of the opposite, right? It's a highly
absolutely.
agricultural area. There are these agricultural surpluses. I mean, the weather is fantastic, so there's really no problem when it comes to, famines and droughts and things like that. But it is really the TMA Pai family that figures out that, oh, we can get industrial development if we start training people and lending to people for very
Right.
specific things. I mean, now, of course, we know the famous Manipal education system, which comes from them. But, even before that, they gave money for people for fisheries, for things like, I have family members who worked at Syndicate Bank. So they told me for an ice factory, because there is a big
Right.
seafood industry. So maybe it makes sense to have an ice factory, right? Maybe it makes sense to start giving money to people who are making Mangalorean tiles and the smaller factories that kind of come around that industry and so on. Here, I figure it's the opposite. Is that a good way to think about this difference? Are there other bankers like Pies who also brought in industrial development through banking?
Before answering that, I'll go back to what really interested me
Yes.
into this topic. So I was working on a one of those PhD courses, international trade term papers. I wanted to look at development of financial centers as to how international financial centers come up. There was a paper which discusses that just like you have international trade centers, there are international financial centers. There's a lot of history, and I'm going to the IM Bangalore library, and I see these pile of books on Syndicate Bank written by Dr. N.K. Thingalaya, and where he is pointing out some of these things. And so I worked as an economist in Mumbai, but you do come across Kamath,
Yeah.
Shenoy, Spies, but it never strikes you that they're all from the same region, and that's where banking has started. I kind of started looking at it and I realized that it's a very interesting area of research. As one probed in deeper, you realize that, oh, when you look at the Indian banking system, especially 69 is when I end. When you end at 69, you see that 14 banks are nationalized in 1980, another six. So 20 banks are nationalized. And out of those 20 banks, you see that there are four from Bombay, four from Delhi, three from Calcutta, two from Madras. One would imagine that in these 20 large banks, you will automatically see that they will come from these main commercial centers. In this, you have four from South Canara, right, which is equivalent to Bombay, and more than Madras. Only two came from Madras, whereas South Canara was part of Madras presidency. That kind of kicks some kind of an inquiry saying that, as you rightly said, that it's basically the trading centers which lead to development of banking. And it's kind of very difficult to argue what comes first, but one would generally imagine that trading starts first and then banks start to happen. But here we see the opposite, as you rightly said. And when you go in deeper, you realize that they set up these banks first to promote. And obviously that goes back to Schumpeter kind of an argument where he said that you can have these banking entrepreneurs come up in these rural areas or these local areas who could set up banks to promote industrialization. So that's what some kind of things which come in this history of South Canara banking and why it is such a special region, what it does. Coming back to your next second question as to whether there were other regions, yes, we do see, which I have tried to document, that there were some of these banks which came up in Kerala also in that region, Malabar, Travancore, Cochin. But then they couldn't really cope up with the banking developments and banking changes. They remained chit funds. They call themselves banks, but their operations remained as chit funds and so on and so forth. So they didn't really expand as one would have as the South Canara banks expanded, which in several ways impeded some kind of industrialization or the kind of activities which the South Canara Bank could promote in South Canara. That kind of an initiative does not come in the other regions. And then I also document about Coimbatore, which had Nidhi. Now, the Coimbatore is a major textile area, and there the industrialization is happening before. And then these entities come up, but none of them really work. I mean, all these banks basically closed down. So there's obviously something about South Canara banks to not just industrialization, but kind of doing the kind of banking practices which became much of India's focus after 1969 in terms of financial inclusion and all that. And a lot of these South Canara bankers were able to do this, without any government mandate, right? I mean, they were basically doing inclusion, they were promoting small industries, they were promoting agriculture. It's a very fascinating story.
This is going to be a bit of a long and complex question because the book and everything you've written on banking is so rich. When I think about bank failures, there are a few different reasons. One is just banks lend to industrial sectors, so they kind of ebb and flow with the business cycle of an industrial sector, right? So if there's civil war, you may have, cotton trade which moves. When that cotton trade moves back, the banks that are lending through cotton trade collapse and so on.
Right.
So that is one kind of bank run. A second kind of bank run is a classic depositors run. There is the idea that a bank has a solvency problem and a liquidity problem, and that rumor turns the liquidity problem into a solvency problem. So this is your typical Frank Capra movie sort of bank run that you think of. And then the third kind of bank failures is because the central bank has not appropriately regulated a bank prudentially. So we have more examples of that in very, very recent times. Global Trust, the troubles that were there with ICICI, Yes Bank, Punjab National Bank, so on. To me, it seems like India has never really had too many of the bank runs of the second kind, the Frank Capra kind. Is that because the depositors were never a large enough group to deposit funds? We never had a broad-based banking system. So that was always, hundis, chit funds. Those would kind of ebb and flow, but they were not integrated to the global banking system. There was no run. There was no systemic risk. And India has really only faced the industrial sector-related bank collapses. And then, of course, the government lack of good supervision by the RBI kind of bank collapses. So that's part one of the question. And then I'll ask you part two.
No, that's a superb question. I wish you were one of my PhD advisors.
Hardly.
One could have looked at these things in more detail. The bank runs, I think, as you rightly said, we do see in the early 1910s that there's a famous People Specie Bank, if I recollect, which speculated in commodities. And as you rightly said, the commodity cycle went down. The Travancore National Coulon Bank is a bank run which is forced by the Diwan of the region, who had some conflict with the owners of the bank and he didn't like them. And he started pushing some bad news about the bank, which one can argue was partly some kind of depositor-based bank run because the bank did not really have a kind of problem. Palai Central Bank is a long-standing problem which happens because of the RBI wanting the bank to sort its ways, and then the bank does not sort its way. It's more of a governance problem with the bank. The bank is not willing to learn, and RBI has understood the banking regulation very well by that time, but it's not willing to mend its ways. And I think partly also because we had deposit insurance fairly early on, 1962, is when after the Palais Central Bank failure, after US, we were the second country to introduce deposit insurance. Then once banks are nationalized, that also...
Then there's no question of runs,
That also takes care of the fact that depositor-based runs will not happen. Even when we've had these recent Yes Bank or Lakshmi Vilas Bank failures, RBI was very quick. One can always debate whether RBI was quick or slow, but as RBI figured it out, it forced these banks to freeze their balance sheets and then deposit, and very quickly found a buyer. So in Yes Bank's case, it was a consortium of buyers. Now we are seeing that they are exiting from the bank. one thing which comes across in banking history is that despite it being very rich, the records are still very scanty. If one wants to, let's say, investigate the number of bank failures, the 2000 from 1913 to 65, one doesn't get bank records. The British who are recording all this information by nature will not really write about bank runs and so on and so forth, because that's happening largely because of
Yeah.
their poor policies or and all that. So that does not come across. And the archiving, I mean, that's been a long standing problem with all of us. We that barring these British reports, we don't really have archives. So this student who is doing his Parsi banking history, he's also sort of struggling to get records. So if one has to investigate some of these failures, the 2000 bank failures in that period, whether it was because of what kind of runs were happening, we really don't know. Right? I mean, with a lot of confidence as to whether it was just the commodities or whether we saw some depositor based runs and so on.
The reason I asked that as part one of the question is, to me, when I was reading the book, it seemed like between 1925, when we're really talking about setting up these banks, Syndicate Bank particularly, before that there are other banks in the region, say 1960s when we get deposit insurance, I feel like one of the reasons the South Canara region did so well is it's one of the few banking areas which figured out how to deal with depositors, because everyone else is really relying on industrial clients and their stock market speculation, which has come in a big way, even pre-independence, and the bank failures are really being caused by the ebb and flow of that. Whereas these guys are quite different. RBI in a very derogatory way says, oh, they like quantity over quality and, all these other sorts of things. It seems to me like the Canara folks are the first ones who really figure out how to deal with depositors and small depositors and diversify that pool of risk.
That's absolutely the case. In fact, Syndicate Bank starts also with this idea. They started early, 1925. But 28 is when TMFI figures out the Pigmy deposit scheme, and you wanted to really reach out. I couldn't find records, but when I spoke to some of the folks, they said that during this Great Depression phase, there was a concern over the bank, but because of the fact that the bank really gave banking facilities to people who had no such facility, they reposed their faith into the bank. And these are all small-time depositors, really far and widely spread. So it's not really the case that one big depositor or a couple of big depositors could really cause a problem. These are all very small folks with very small savings. Because of the fact that every day there was this deposit collector who was going to these people, so there was a lot of faith. They could create that vital 5-letter word trust with these guys, where nobody really. So we had the Presidency Bank of Madras, which set up a branch in Mangalore, but it was not really very active. It was only giving loans to some big British merchants and all that. For the first time, you kind of turn around the story saying that banking is largely urban, metropolitan, and so on and so forth, driven to very rural. There are others who also do this, but the South Canara folks really figure these things out. Their strategies and their ways of reaching out and saying that, okay, nobody had trust in you. We opened this bank and we gave you all these facilities. Whenever that push came to the stove, wherever there were all these concerns, all these bad news, the South Canara banks were doing completely fine. Moreover, I mean, also the loan book was not really tied to the big industries, again, to the small folks.
Yeah.
They could really create some kind of a circular economy and a productive one around the South Canara region, which they benefited from.
When I think of the South Canara region again, there are now potentially two kinds of systemic risk. Let's compare the South Canara Syndicate Bank to something like the Mangalore branch of the Presidency of Madras Bank.
Right.
One kind of systemic risk is you're plugged into the global supply chain, and therefore, in some sense, you're plugged into the kinds of business cycles that affect the global trading and banking system, which could then come home to you. Basically, what's happening in the Great Depression in the 30s, it starts infecting a number of banks. It finds its way all the way to Bombay and Surat, and you see sort of bank failures, at those trading posts.
Right.
A second kind of systemic risk, which we see much more in modern India, is agriculture related. So if you have large number of people that you've given loans to who are all in the same agricultural area, and if there's a big drought or a crop failure, then suddenly all those loans are going to fail at the same time. The interesting thing is, Canara Bank's customers look like the latter, right? They're not plugged into that big business trading post-global chain. It's really the small-scale farmers, landless farmers sometimes, who are taking small loans to actually go on. But they never have this kind of systematic agricultural crop failure led risk. So the
Right.
question there is it because that region just didn't have any agricultural problems like droughts? It was just a very fertile region with good rainfall? Or is it because they managed to figure out how to cut through that systemic risk and not have that become an issue?
It was both. I mean, obviously, the rain of the region was very consistent. You really didn't have drought and all these adverse weather shocks, which are kind of apparent. I mean, you really didn't need a canal system here. You didn't really need water system here. The rainfall was adequate and good enough for you to plant crops and deal with it. And then the bank's strategies, which is obviously learning by doing, because there's no rule book over there where you understand that you got to really lend to small number of people in very large numbers, small
Yeah.
value,
Yeah.
which kind of in several ways diversifies the risks compared to other places which are clued into either a India shock or a global shock. Some of those things did not really affect South Canara bankers.
But they must have had floods, right? You have cyclones, you have floods. Like it is, at the end of the day, a coastal region. Now, too little rainfall is a problem, but too much is also a problem. Is it just a question of good luck and being in a great region? They must have done something, right, in terms of their risk management. Like, did they have a risk management officer? Something must be going on with them, right?
So one thing is obviously there that very early on they are trying to diversify away
Yeah,
from
that's true.
South Canara. So they are open to the fact that we need to move to other regions. They are open to buying banks, merging banks from other places. Because of their track record, even the regulator is quite happy that the South Canara banks are merging some of these after the Bank Regulation Act comes in, and some of these South-based banks. Obviously, they are not just based in South Canara alone. They are gradually trying to diversify and move on. And I mean, I didn't really come across records of flood or something which really, I mean, because what we have is the balance sheet data. And
Yeah, yeah.
when you look at the balance sheet data, it comes across as if it's some kind of a magic going on where everywhere there are these banking troubles, but this region pretty much, especially the Canara Bank, Corporation Bank, Syndicate Bank, they pretty much manage it in a very effortless way. One
Yeah,
can use the word, but I'm sure there is a lot of strategizing and a lot of thinking through some of these things, opening branches at strategic places, understanding the crop patterns,
yeah,
because they are deeply connected to the roots. They understand what's going on. TMA Pai, because he's a doctor,
yeah,
so he understands the region. He is treating every
yeah,
patient over there. He's the only doctor in the region or second doctor in the region, and his mother wanted him to stay, and he stays. He wanted to go, but as destiny would have it, his brother sets up the bank, and then he realizes that I understand this medicine, but I see a lot of poverty around me. I see that people don't have even basic money to have basic treatment. So what can I do? So those are some of the fundamental questions they're asking,
yeah,
and they're trying to work around them. And obviously, this trust, I think, is a big deal,
yeah,
big deal there.
yeah,
Even today, after nationalization, 50 years down the line, you go to that region and you ask people about foundation branches. So there was a lot of pride in the fact that when this Vijaya Bank was merged into Bank of Baroda, there were a lot of protests in
yeah,
that region because that's their identity.
yeah,
So again, it's this. Also, the promoters. I mean, they played a major role. They were all these guys who were eminent individuals who had a lot of respect in the society. So that also kind of parallelly, shaped all these. So even if there were these floods, there were this, that. So I do show that there were some of these banks, because there were 22 banks which came up in the region.
yeah. That was the follow up. What's the secret sauce that Syndicate Bank had? So, even though in that region there aren't like major failures and catastrophic events and things like that, but Syndicate Bank still seems to have done way better than the other banks to the extent that eventually I think about 20 or 22 banks get merged with Syndicate Bank, something like that. So it actually
Right.
becomes bigger and bigger, and it's stabilizing potential banking failures in that area, right?
Absolutely.
So what
Absolutely.
is it that they are doing differently?
Syndicate Bank with the TMA Pi factor, where he's obviously one of the most respected individuals in the region, and everybody else starts to open up banks. And another thing about South Canada is it's a very cosmopolitan area. I
Yeah,
mean, there are a lot of people who are there, so everybody sets up a community bank. There is the Pangal Nayak Bank. There are all the Pi Money Bank. I mean, there are many banks which open up in this region catering to a particular community, and a lot of the promoters are kind of well known to each other. But then, banking is not something which is everybody's cup of tea. You can set up a bank, but then you got to be very vigilant to the fact that you have to raise capital
Yeah.
consistently. You have to basically follow certain prudential norms, which obviously at that time RBI did not come up with any of these norms, but it's learning by doing. They understand that what leads to stability in banking and so on and so forth. Whereas all these others who set up these entities, they are not raising capital. They are giving loans to all kinds of different people who may not be giving back loans. But then very quickly, each time, I mean, this is another feature. So of the 22 banks, 17 don't do too well. And all these 17 are merged by the South Canara Bank. They were playing kind of an RBI role where if there's a bank in trouble before it comes to us, let's just kind of buy this entity
Yeah.
and move ahead. So as a result, Syndicate Bank and Canara Bank and all these guys, they merged most of these South Canara banks themselves. And then that did two things. Firstly, it prevented some kind of bank failure in the region which could spread. Another thing was that other regional banks could not come to South Canara Bank, South Canara region, right? So in that sense, they could also prevent some kind of competition. But then these the South Canara banks are very aggressive, or
Yeah.
they were very okay with the fact that we'll go to other states and merge.
Yeah.
So multiple things they do over a period, which prevents some of these failures from happening.
So, how important is caste and community in this entire setup, right? Because if you look at the history of, as they call it, indigenous banking, again, it's a phrase I don't like. They talk about
Hmm.
the Marwaris, that is a very tight knit community. Everyone knows everyone. So, a lot of the lending is done based on trust, right?
Right.
The same
Right.
is true for the Sarafs from Gujarat. The same is true for the Chettiar community, where, the caste plays a really, really important role, especially because they're trading overseas, right? They start setting up trading posts in Malaysia and Singapore and Indonesia and, sort of that kind of maritime trade in India. On the face of it, the South Canara banking system looks extremely modern, right? It doesn't look like that typical caste community trading relationship. It seems like they're willing to trade with strangers. But at the same time, if you look at the list of promoters and the banks that are merging with them and things like that, it does seem like there is some caste and family and community network at play. So, how do you view that region?
No, so people who looked at the banking of South Canara, I mean, there were all these folks like B.V. Bhatt and so on who look at the banking, and B.V. Bhatt was one of the Syndicate Bank executive directors. So he tries to get this message around about Syndicate Bank, and one of the researchers also called it a bank which had this indigenous banking caste kind of a network, but in terms of balance sheet, it was very modern.
Yeah.
So that's a very unique kind of a combination which they could figure out that yes, they were open to trading, but I think all their main appointments were largely the local caste and so on and so forth. The God Sahib Brahmins played a major role. Most of these, the corporation bank, which was set up by one of the Muslim, by one of the very foremost members of South Canara region, but then the corporation bank over a period of time was managed by God Sahib Brahmins. So obviously there was this caste network, but then they don't really overplay that too much. They are very careful that at the end of the day, this is not just a caste driven thing, it's a banking thing. We have to raise capital, we have to build more branches, we have to be very careful with our loans and where the deposits are going and so on and so forth. So they are sort of in this very interesting, unique combination of combining the goods of indigenous banking with the modern joint stock banking. I mean, that's a very rare and a very unique sort of a combination. Another thing is that historically, the bank is more connected to the Bombay region. Sorry, the southern region is closer to Bombay, though it is included in Madras Presidency.
But that's also because it splits, right? The Canara region splits and the northern part goes to Bombay
Goes
and
to Bombay, and the southern part goes to, and that's another. These are all very interesting snippets that there is no bank which comes up in North Canada, despite it being a very sort of a similar region. It's only in South where all these activities concentrate. So we do see that in these records of these South Canara banks that they are extremely excited about the fact that we will open a branch in Bombay. It's not Madras. So for them, the highlight, the main point is because there is some learning happening. We do see that in case of Canara Bank, it was initially called the Canara Hindu Permanent Fund when it was set up based on Nidhi, because the Subbarao Pai, who set up he was a lawyer who studied in Madras. He understood the Nidhis from that region, so he set it up as a Canara Hindu Permanent Fund. But then there was a promoter of the region, or there was a well-wisher from the region in Bombay, or well-wisher of the bank from Bombay, who was known to him, who told him, who advised him to call it Canara Bank. So there is some discussion. Some they are actually watching the Bombay guys as to how they are doing banking in terms of balance sheets, in terms of all this. But then very careful that you also can't upset this caste network and so on and so, because that's also very crucial to our function. So balance sheet should look like Bombay, and whereas it should look like a local bank. I mean, it's a
Yeah.
fantastic combination to have.
Yeah. This tussle, I mean, of course, everything comes to head in 1969 when these banks are nationalized. But from the very beginning, I mean, Syndicate Bank precedes the Reserve Bank of India. But from the 1930s onwards, when you start having these committees which are looking at the banking system in India, then of course you have, officially the Reserve Bank of India. There's this constant tussle between the Reserve Bank and the South Canara banks, right? Because
Right.
it's almost a kind of derision, like they feel like these guys don't know what they're doing. Some of that
Right.
derision comes from not having sophisticated depositors, I guess, or like sophisticated borrowers. They make these
And even
statements.
promoters.
Even promoters, yeah, exactly. That they're not coming from like these major industrial families or like these long-term banking families. And they're also not lending to these really big businesses, right? So there are these weird things like, quantity over quality, which one would think from a central bank's perspective is you want large number of small deposits. It's a great way of pooling risk, but that's not how the RBI is viewing it. What is the RBI getting wrong about the South Canara region? Is this just one of those instances where, a bunch of elite bureaucrats simply don't understand what's happening on the ground? They're looking at, it's like James C. Scott seeing like the state, right? Like they don't understand the banking system. They don't understand the depositors, the industry. Or are they really onto something that there was, at different points, different kinds of systemic risk built into the balance sheet. But Syndicate Bank, being a forward-thinking bank, started taking action. The moment RBI pointed something out, they started acting upon it and there was some learning that was built into the mechanism through these reports. Because the Syndicate Bank future never quite plays out the way the RBI is predicting it's going to play out.
Fascinating question. Again, when RBI comes in, RBI is set up on Bank of England lines. They don't really have an understanding of the way banking is happening. And then the Bank Regulation Act comes in, which gives them powers. RBI, strengthens its banking regulation, and they start looking at banking in a very vigorous and a very rigorous way, if one can use that word. So what is going on is that, and RBI offices are in Bombay, Calcutta, where all these big banks are there. You're talking to all of them, and just like me, some 60, 50 years later, trying to ask this question that how South Canada is doing what it is doing. A similar question is obviously coming to the RBI as well. That look, how can these guys do banking, which is so different, and how can they do a good job of it? So what's going on here? I mean, that question is still a very interesting question to look at, right? Because if you look at the top 10 banks, even at that time, so you have these Bombay-based banks, Calcutta-based banks, and then you suddenly see South Canara Bank, which have a fairly decent size. Canara Bank and Syndicate Bank have been the fifth and the seventh largest bank throughout the 50s and throughout the 60s. I mean, what's going on there? And when you kind of break it up, then you don't understand what's going on here in terms of promoters, in terms of, as you rightly said, the customers, the depositors. So RBI is not sure whether they're doing the banking right. I mean, and RBI, thinks that this is too lucky a story, and maybe something is going to break up, and we are not going to. So RBI starts looking at all these problems that so Syndicate Bank has these pygmy deposits where you are collecting deposits from for people who have very low incomes, and people who Syndicate Bank is sending these door-to-door deposit collectors who are their own employees. So the RBI has a problem with that, because there's a Banking Regulation Act which says that those who work for banks cannot go and collect deposits. But then Syndicate Bank tries to explain that look, people will not otherwise give us these deposits and so on and so forth. So it's an exercise to promote banking. But RBI does not understand, why do you really need to do this? Because that whole idea of inclusive banking, you generally thought that cooperatives are good. Cooperatives should be doing it. Why should a commercial bank, be looking at some of these things? Then these guys also start an insurance firm. They have an asset management firm. Again, that's another part of the strategy where they're trying to diversify their risk. It's not just a banking play. They are trying to look at other financial services. Very quickly, they understand that banking and insurance go hand in hand. But then RBI is also uncomfortable with the fact that the bank should not really be offering an insurance. Then the promoters of the bank, you really don't know anyone. There are no big Bombay guys or the big Calcutta guys or big Madras guys. Not Calcutta, big Bombay or big Madras guys, not on
And
the
the
bank.
first one is also female, which is also, I'm sure, something that puzzles them.
Right. So again, all these things are going on, and so as a result, it's a very unconventional kind of a banking. What's interesting is that all these years, these guys are fighting a lone battle in trying to be relevant, and then finally, social control of banking is being pushed when Morarji Desai is thinking that nationalization is impending, and the way to prevent this is to make banks more social. So a one-man committee, D.A. Pai Panadikar, who I mentioned, and I had the privilege to meet. So that committee was set up, and that committee was basically also told that, okay, why don't you go and visit South Canara? Because I keep hearing that they are not doing the right kind of banking, and there's a lot of problems going on there. Whereas Muraji Desai was the view that maybe they are doing something right. So you need to tell us what is it. So when Pai Panadikar, when he kind of goes to the South Canara Bank, he's received by Syndicate Bank chairperson T.A. Pai. T.A. Pai takes him around, and it shows that all these tech books and all these depositor books, they are all of fisher women and so on and so forth, and a lot of small agriculturalists and so on and so forth. So he gets a complete shock saying that, oh, I have visited all these big banks and none of them have any social plans, and whereas these guys are doing social banking and are profitable and are growing, but that report is never made public. I tried my best to get a hand of that report. There were very few copies anyways, and one I tried to find out in my own ways whether that report is never made public. So to find a copy of that report was very difficult. But apparently, a lot of the social control of banking, those ideas kind of came from the South Canara guys. It's kind of very interesting, this whole hierarchian kind of banking where no, there are no controls. These guys are doing inclusive banking without any mandate, but they're doing inclusive banking because that's their main business and they understand it. And like an entrepreneur, like a banking entrepreneur, they kind of shape their banking policies in such a way that it leads to a phenomenal growth. They are very profitable. Usually, inclusive banking, even today, is not seen as a profitable activity. But these guys were not just inclusive, they were large, they were profitable. They did everything, I mean, collectively in very interesting ways. So that's really the meat of the South Canara story. I mean, despite all these regulators not really having a very good view of them, and then all these policies were implemented later. I mean,
And badly. Speaking of policies, can you walk us through this pygmy deposits and how that eventually became the basis for lending using the deposit as collateral and so on? So, can you just walk us through that? Because it's such an interesting example. It started so early in India
right.
and completely through a private banking system without the government kind of forcing people to do this inclusive lending or to lend to high risk people or something like that. This was just done in a very smart way. So, can you tell us what that scheme was like and then we can talk more about it?
The Pigmy deposit scheme, TMFI, as I just mentioned, he's a medicine person. He is so at that time you really didn't have so this bank. His brother Upendra Pai just starts this bank because there's a major Gandhian movement in the country. Everybody is deeply influenced by Gandhi. He's also very religious, and he thinks that maybe setting up a bank is a good idea to serve the nationalist Gandhi-based nationalism. A lot of banks, Union Bank and so on, so forth, also started with this Gandhian wave which comes in. And but he's not very interested in banking at that time. TMA Pai is just he has this clinic right next to the bank. I mean, because this is operating out of their home. There's a small bank and there's a clinic, and he's kind of watching what's going on here. And his brother makes him the joint promoter, but TMA Pai is not very sure what to do. And then he realizes through his experiences in the district that people don't have basic savings and so on and so forth. And so what can you do? And so he starts thinking of some kind of a small deposit scheme, like an entrepreneur or whatever you may call him, a visionary person who understands that Firstly, people have very small savings. Those amounts are going to be very little. And most of these people will not come to my bank to deposit. I mean, there is no way because these guys are all caught up in their own functions. I mean, in their own businesses. And late evening, let's say a fisher woman or a fisherman has come in the late evening after fishing in the morning and selling the stuff in the afternoon in the evening. So it's unlikely he will come or she will come to my door. I mean, in fact, even she. I mean, a lot of
Yeah.
women were
It
also
was mostly
banked.
fisher women, yeah.
So so you kind of figure out that let me try and do this. Let me have these door-to-door deposit collectors who will kind of go. We will give them a 3.5% sort of an interest rate. And the 3.5% interest rate is much lower than the interest rate other banks are paying at that time, right? That those interest rates are going at a much higher. So as a result, your cost of funds really go down, and you are basically reaching out to people who are never going to be who nobody really cares about.
And these are like 1 anna, 2 anna kind of deposits, right? So these are tiny
Right,
deposits.
right, right. Absolutely, very very tiny. So you kind of start collecting them, and it's a very religious thing that every day somebody's going, so that trust is being built. And then some problems in the bank happen, but none of these depositors withdraw funds, and so on and so forth. So as a result, gradually this kind of thing starts to pick up. Then they start setting up these branches in remote locations. Again, these branches are set up in a family's house or some relative's house or some friend's house, and usually a prominent person in that place so that people understand that there's something important happening. So these pygmy deposits become a very important instrument for the syndicate bank because it's liabilities. I mean, unlike the other depositors who could withdraw funds, the large depositors, these guys are, they don't even know. I mean, somebody's taking an ANA from them. And then very quickly in 7 years' time, if you collect so many ANAs over a 3.5% interest, it gives you 350 rupees, right? And some of these,
Yeah, it's like a couple of annas
right.
a day, and they can't even believe that it'll lead to such a
So
large sum of
when these
money.
350 rupees are given to people, they faint. They have no understanding. They start crying because they have never seen this kind of money. So that demonstration effect starts to kick in, and gradually more and more people are interested in being part of the scheme, which also because of the trust and all that, and then the bank kind of balance sheet starts to become bigger because of these pygmy deposits, and then you also start giving loans to these guys. So it once somebody is the depositor and he needs money for fisher nets or he needs or she needs money for something, then you're very happy giving it because you know that these guys are not really going to not give it back because it's a small sort of a community over there. Most of the employees are not really bank graduate. I mean, not really graduates and so on and so
Yeah.
forth. You basically recruit local
Yeah,
people.
initially it's an apprenticeship model.
Right,
They just get
right.
people from the community and teach
Teach
them
them
banking.
banking. So as a result, you know who's to give loan to, where these deposits are coming from. So you are able to build this wider fisher net, wider banking net, and as a result, it's a major story in the entire syndicate bank movement. And then parallelly, many banks in that region also start a similar sort of a deposit scheme.
So, this pygmy deposit, at one point, there's this, again, an issue and a tussle with RBI, right? Because the idea is that the pygmy deposits are small.
Right,
The cost of collection is relatively speaking high because you have collectors literally going daily door to door to collect those 1 or 2 annas.
right.
And if I remember correctly, the interest rate at which they lend it out is 7 or 8%, like any
Right,
loan made
right,
off of the back of a pygmy deposit, whereas it's like 3.5, 4% paid on the pygmy deposit, right? And
right.
this 4% gap seems to be the end of the world for RBI. That this is like usurious and it's too large a gap and it shouldn't be done. So one, what is going on there? Because it's still it's this is why the RBI seems bizarre to me, right? Because they must have known that money lenders are charging double digits daily, right? That kind of crazy interest rate. So this 7-8% is nothing in comparison to their actual true cost of borrowing in the, on the ground through money lenders. So why is there this big gap between what's happening on the ground, what Syndicate Bank is doing, and then what RBI perceives Syndicate Bank to be doing?
Again, a sort of a $1 million question, million rupee question, million pygmy deposit question. So, where so this, as I said, the RBI is talking to very different kind of bankers. It has no understanding of the way these things are being done, and you're absolutely right. In fact, there's this great book by Menfi, who kind of is an anthropologist who goes in this region is completely shocked that in places where you don't have anything, you have a bank branch. and these bank branches are doing a very good job, and so on and so forth. And money lenders have almost been wiped out of the region. There is no real
Yeah.
case of a money lender. And I mean, this is later, but after 69, when the first kind of records on district level banking is set up in the country to monitor what bank actually syndicate, South Canara region is really at the top
Yeah.
in banking accounts, in loan accounts, in deposit accounts. So RBI should be seeing all this, but then it's just perception saying that how can you be so good at something which nobody is being able to do this. I mean, there's no rules, there's no playbook, there is no such understanding. Nobody is able to do this so effectively. One can identify one bank. So there's this Bank of Italy which became Bank of America, and which also had similar origins and similar history as Syndicate Bank. But that's like the loan bank. Here you're talking about many banks doing a similar kind of a thing. So this understanding, I mean, the banking understanding, I think is not that great with RBI at that time. They really don't understand what's going on because again, there's no such region. I mean, there's nobody else who's been able to do this as effectively as these guys are able to. So you're always thinking there's something fishy going on. How is it possible? I
But
mean,
at this time, Syndicate Bank and a bunch of the banks in the South Canara region, they are setting up branches outside of that region, right? So
right,
they
right, right,
venture far into the Madras presidency area. They venture into Travancore, Cochin, and of course, post-independence, they start venturing further north and so on.
right, right.
So is it because the pies are not interested in evangelizing their model? I mean, they're all English speakers. They come from an educated region. So one would imagine there's a literature on this. So I'm just so baffled by the disconnect, so to speak. Is it just elitism?
Partly elitism. I mean, I wouldn't really call because there are some very competent RBI folks over there. I mean, only when you look at this, but I think it's partly that this region, the records, because as I said, the region was classified. I mean, if this region was part of Bombay Presidency, right? I mean, then there would have been more understanding of the way this region is organized, the banking in this region. This region is part of Madras. Since Madras guys are completely disconnected from the region.
Yeah, because East and West Coast, and the West Coast has completely different politics, caste, agriculture, everything.
So they don't understand the Madras guys don't understand what's happening here. The guys who would have understand it's not really part of them. So this region does not really, if you look at any of these records, you look at Amir Bakchi's excellent work on
Yeah,
Presidency Bank,
SBI.
SBI history. You look at the banking committee reports of the 1930s, right? It's only the Madras Presidency report which kind of briefly mentioned about South Korea is completely missing. It's not really there in any historiography. It's not really there, though. Very early on, 1960s, they appoint Thingalaya as the chief economist of the bank, and Thingalaya, a young man at that time, just a graduate from Bombay University. So they also understand the role of an economist, right? I mean, and Dr. Thingalaya has been instrumental. I dedicate my book to him. Unfortunately, passed away. I wish I could have presented this book to him. He was disseminating a lot of this information, but this is mid 60s. By then, a lot of the work had already been done. And then in 41, they also set up the printing press, which is again, which also starts disseminating this information about banking. And then there's this pamphlet which I got in the RBI archive, which is telling you about that, when there's this concern around the Palais Central Bank failure. These
Yeah.
guys are talking about that their banks are stable. So, and they're using these printing presses to disseminate this information. But somewhere down the line, I mean, again, one needs more and more material. In the RBI archives, a lot of records have been destroyed. I don't know the way RBI archiving processes work, but
Nobody does.
so, so as a result, a lot of these records which could have, so you only have very few of them where these conversations are happening between TMA Pai and the RBI governor and so on and so forth. And some of it from Dr. Thingalaya's work, some of it from here, some of it from there. So it's a massive jigsaw puzzle in which I still have holes. Despite writing a book on it, I think there is still more to be done to understand the kind of questions you're asking. Because why RBI couldn't understand? Because you are trying to solve the money lender problem all
Yeah.
around. And there is this region which does not have a money lender problem. It's basically being done through the commercial banking system over there. So why does it take you so much time to understand some of these things? I mean, that whole idea of maybe disseminating information has not been that great.
I have another weird question, and this is not directly coming from your book, but it just got me thinking. There are two communities that are very good at banking and at fast food. One is the Marwari community, which set up, all these Agrawal food joints all over the country, and the second are the Udupis.
Right.
Right? How much of the success of the Udupi fast food chain do you attribute to this kind of a banking system? You get wings to fly to other parts of the country because you have people who are solid lenders. You can get into a business which is cash heavy
Right.
and sort of like a daily transaction cash heavy model. Or is it because of this Marwadi and Udupi people had to travel to other parts of the country? You need something that's familiar to you. You need familiar food. What exactly is going on? Because this seems like too much of a coincidence to me.
No, great question. In fact, I missed answering the earlier part that, one question which Dr. Singalaya always used to ask, and he used to say that you had Marwadis. I mean, all these money lending communities, the main ones, the Marwaris, the Bhatiyas, the Parsis. Parsis did data set at the Central Bank of India. The Gujaratis, I mean, where I am currently, the Gujarat, you had mainly the Bank of Baroda, which was the Princely State Bank, and Saurashtra Bank, Bank of Saurashtra, which was a combination.
An amalgamation, yeah.
And then you had Bank of Western India, which was set up by the industrialists in Gujarat, in Ahmedabad, but that didn't really do well. That's another question which comes in, that out of all these major money lending castes, none of them are really able to take on banking like the way South Canara, which didn't really have a banking lending culture. I mean, they didn't really come from a lending caste. Most of them are professionals, educated folks, and there is this major migrant history that they are settled in Goa, and then there's a Portuguese attack. Some of them go south, some of them go north in Bombay, and that leads to these ties between Bombay and South Canara in terms of the caste networks and so on. Now, when it comes to the food, I obviously food, the Udupi food is an all-time favorite. Uh, who doesn't like that kind of food? And but then the Udupi movement starts in Bangalore, where these guys go to Bangalore and there's this familiarity with temple cuisine.
Yeah.
The Sri
So it's
Krishna
really the Madhva temple cuisine that
right,
starts
right, that
being
starts.
disseminated all over.
So I did try and study that. Chinmay Tumbe forwarded some papers around it. And I kind of read through them, but I could not really see some direct connection. But I'm sure there was an influence. They could see that because largely the service orientation, very professional in running these things, running it in a very small setup, not really worrying too much about setting up a fancy restaurant, but just keep it very basic, very quick, very efficient. I think some of those practices they could have picked up, but not really the banking of South Canada leading to funding some of these Udupi outfits. That sort of a connection I didn't really find.
Do the Udupi outfits bank with South Canara banks as their sole banker?
Actually, I didn't really investigate that question because again, when I kind of went into this region in Mangalore, Udupi, because these banks have been nationalized, there's been no real history. You have to find some very old folks who were there before independence and kind of had some ideas about these things and whether they set up some of these. And I didn't really go to some of these major Udupi chains to find out whether they.
No,
But
that's
I'm
fine.
sure.
It's just curious. I'm just curious about
But
it because,
I'll not be surprised. I mean, why not? Because
right? Why not?
Canara Bank did shift its headquarters to Bangalore,
Yeah.
so I'm sure Mangalore outfits definitely yes, because that those are the only banking services available. But I'm sure the Bangalore ones and so on and so forth, because there was a I stayed in Vijaya Bank layout in Bangalore, which was set up by the Vijaya Bank folks largely for. So there was this bus which used to run from there to. So again, I'm sure there's a deep community network
Yeah.
where if one can get the hotel archives, the restaurant
Yeah.
archives, then one can find that out.
Yeah, and historically, the Shetties and the Pies have also had at different regions some
Right,
conflicts also, depending on money lending practices and things like that. So that would
right.
be an
I mean
interesting.
that's also the reason why Vijaya Bank was set up separately. I mean
Yeah.
the Shetties set it up. I mean it was mainly catering to the Shetties, and they built it up in a very different way.
Yeah, and it's funny, right? Because the Shetties, I mean, it's not exactly the pygmy deposits, but the Shetties do have some version of that, right? That
Yes,
you keep collecting money over a 10-year or an 18-year period, and at the end of it, they pay it back. But I believe they weren't as faithful in paying that money back to depositors as one would have wished. And it was a lot more based on religious and community and some hand-waving juju as opposed to actual prudential banking norms.
yes. So Vijaya Bank is a story suddenly picks up after the SS Shetty comes in, and it's a very interesting thing which IG Patel mentioned in his memoir,
In his page, yeah.
where he says that in '69 I was against nationalization. In '80 I was the RBI governor and I asked Indira Gandhi to nationalize the six banks. IG Patel mentions it. Indira Gandhi asks me, okay, why is it that you want to nationalize these banks? And he says that, I'm not very happy with the practices of these banks. And in which Vijaya Bank is one of the bank in which he's not very sure of the kind of growth which is going on, and which he thinks that since the bank is very large, maybe nationalizing it would kind of stabilize it and not really lead to the kind of trouble. So again, since this whole historiography goes to 69 kind of a period, and these banks have been nationalized, and we've not been very good with archiving material and all that. So I couldn't really get any help from any of these banks to kind of go into the deep archives and look at it, because none of them have maintained it or whatever it may be. So one has relied on RBI records and all these inquiry committees and Dr. Thingalaya's work and so on and so forth, just to stitch this story.
So, coming to bank nationalization, it's a weird thing because I've been thinking about that question. I've read the court case, everything, but I don't understand the reason why it happened. And the kinds of banks that were nationalized don't exactly give you a good picture, right? So, one reason people say is, oh, it's all about financial inclusion and, making credit facilities available to rural areas. But if that were the case, there was no reason to nationalize the South Canara regional banks, right? Because they were already doing that. Some of it says, oh, it's because, they were worried about bank runs and failures and things like that, which, after deposit insurance kicks in the 60s, you really need to be very concerned about that. But again, then the South Canara Bank region, some of the princely state banks, which had already been associated with or, attached to SBI, you didn't really have to nationalize these banks wholesale. And then the third is, of course, oh, it's all about the vanity of one person, Indira Gandhi, want to reach the commanding heights. One half of every transaction is money and credit. So you have to, of course, nationalize that part of the economy. So do you have a good handle on what is the fundamental reason for nationalization? Because I can't quite pinpoint to it. It keeps shifting.
Yeah, I mean, actually, I wanted to investigate this question in the second follow-up book. But then I think Srinath Raghavan is in his upcoming book on Indira Gandhi, on which he's recently given a talk at Azim Premji University, also is explaining some of this historiography of the 60s. And I'm looking forward to that book, where I think Srinath is hopefully, I mean, given his extremely interesting, extremely wide-ranging scholarship, perhaps will answer this question finally, that why these banks are nationalized. But my own understanding of this is that, again, a lot of events happening in 60s. Indira Gandhi is not really seen as a prime minister material. 67, she loses these major elections. 65,
Yeah, the other syndicate.
right. So there is a 62 war. 64, PM Nehru passes away. 66, Lal Bahadur Shastri unfortunately passes away. And then you have this wars and droughts and many problems. And Indira Gandhi
Foreign exchange crisis.
right. Indira Gandhi
And
is
the
at
Bell
sea,
Mission.
inflation crisis. Indira Gandhi is at sea, and nobody is really taking her very seriously. Then I really don't know who's really advising her on bank nationalization. And then Moraji Desai gets a whiff of it, and Moraji is deeply connected to Bombay's capital world. So he goes on to advise these guys that we need social control, and that's where social control comes in. But then I think Indira has made up her mind that the only way I can kind of push this narrative is by nationalizing these banks. And then how do you go about nationalizing them? So we have two records, IG Patel and DN Ghosh, where randomly you have to come up with some number. So you say the banks which have a deposit greater than 50 crores will be nationalized. And Andhra Bank, which is very close to that number, and by if that nationalization happened in December, then Andhra Bank will also be nationalized. Maybe there will be 15 banks instead of 14 in the initial slot. So overnight, these guys are asked to. LK Jha is not really involved in the discussions. Then RBI governor, and you just kind of just do it with the bureaucrats and just announce nationalization.
Yeah, it's an ordinance, yeah, because otherwise people will start, I mean, money is so liquid, it's just going to move out of the accounts, right?
The monsoon session was just about to start,
Yeah.
but Indira Gandhi kind of overruled all that, and Atal Bihari Vajpayee and so on and so forth, and basically raised these questions that session was to start and why is it, and then you had Swatantra Party and Rajaji and so on, the people who were basically anyways very upset with what's going on. They were very unhappy with. So there are a lot of these questions which are there in the Lok Sabha debates, where they are constantly asked. They're constantly asking Indira to respond, and Indira Gandhi is either not there, but then, or she basically says that there are multiple factors. Firstly, the big banks are not really lending to the poor and the agricultural and so on. Second, that these banks continue to be dominated by the large businesses, large merchants, and we want to take that away. And it's the socialism of the Indian economy. That initial plan always had banking involved in it. It's just that it got delayed for some XY reasons, and I'm kind of doing it. So these multiple reasons, I mean, were given by Indira Gandhi in her speech, but I think largely it is this political economic shocks which are there in the 60s, and Indira wants to, I mean, that vanity or wants to just kind of use this. And I think after 69, there were no one need not ask who's controlling the show. I mean, it was Indira all the way. Right? And 69, and then you nationalize the insurance businesses, the general insurance is nationalized, and then Bangladesh war happened 71, and then Indira Gandhi is basically got the entire control.
So, how much of this is path dependence? And I'm going to take like a slightly longer arc of history here. So, India doesn't have a central bank. And, of course, famously, John Maynard Keynes comes and writes this report. And the question is, should India set up a separate central bank, or should it sort of amalgamate and consolidate the presidency banks into a central bank? So that is sort of the first round, right? Which is you just pull the presidency banks together and there's the imperial bank. Then there's a second round, which is when British India merges with the princely states. Sardar Patel is actually stitching the union together, but there's a stitching of the banking union also that is simultaneously going on, right? So this Bank of Saurashtra comes along, Baroda, all these things then become affiliates of the State Bank of India, which is not exactly a central bank, but it is the primary sort of, state-owned bank. And now then you have this nationalization. So is it a sensible thing to view all this as one long path-dependent arc? There has been this tendency for the government to consolidate power over the banking sector. Sometimes it's done through the regulatory supervision role. Sometimes it's done through the seigniorage role if we're talking about the second half of the 19th century. Then, of course, it's done through nationalization or taking over banks that seem like they're failing. Is that a good way to think about it? Or is 1969 bank nationalization just that crazy outlier event because we had crazy economic policy during that period of socialism?
I think it's again a bit of both, because Bank of England is set up in 94, largely as a chartered bank to fund these wars. It is a shareholder bank, but then the government, people at that time realized that it's a very important entity, and you begin to shape a lot of banking around Bank of England. And then Bank of England gradually in 1844 goes on to become this numero uno sort of central bank. Then Napoleon also realizes that one reason why England gets its act together is because of the banking facilities, and that needs to Bank de France being set up. So historically, we've seen that some kind of a central government owned or the king owned bank really can dominate affairs, because that's the second leg of the economy. There's a real side and there's a financial side. So if you control that, a lot of action anyways you control. And when they think about setting up a central bank in India, and as you rightly said, Keynes comes in and he's thinking that it's not a good idea to set up a new central bank. State Bank of India anyways does those activities. But then the Wilson Committee comes in, and Hilton Young Commission comes in, and he basically gives you a separate idea that all this state bank will not work. You need to set up a separate bank, Reserve Bank of India. Reserve Bank of India model of Bank of England is a shareholder bank, but largely its policies, its governance is again determined by the British government. And then the independence happens, and the first thing you do is to nationalize the Reserve Bank, right? Which is one of the first things the government does, and that's also the way even Bank of England is nationalized. A lot of nationalization is happening all around the world, anyways. And the Hayek writes the Road to Serfdom, largely again protesting against all these. He's seeing that these outcomes of the Second World War and so on and so forth will lead to rise of nationalism. These colonial states will become independent agencies, and most likely they will end up nationalizing industries and so on and so forth. So again, there is a larger narrative at play. But then what we do is that I think there is France which also nationalizes banks. I mean, and we are one of those countries which nationalizes in a very large way the banking system. I mean, in one swoop, you take away 80%. And it was still okay to do it in the 50s and so on. But 69, you were getting a sense that these things are not really working. You've nationalized industries in the past, none of them are really doing well. So, though the banking history, when one takes a larger play, you realize that the governments and the kings have always wanted to have this central agency. So, you would want to do it that way. But to do it in 69 in such a large group, and especially, I mean, this 50 crore criteria was a very random criteria. You could have kept the South Canara banks away because they were anyways doing what you wanted the banks to do, inclusive banking and so on and so forth. And that could have been a very interesting case for us to study that did the nationalized banks do better or the South Canara banks do better in terms of inclusion? And I'm sure I can already bet my horses that who would have won that race. The private enterprise driven model of the South Canara guys would have won over the government bureaucratic diktat over pushing these. So, so again, by nationalization, you not just intervened with some of these entities which may have had a case that they were not really lending to the rural and all that, but you also upset some of these South Canara banks which are anyways doing a fine job. So you killed that private enterprise from banking. You sort of took that initiative away. Everybody was very scared, that their banks should be nationalized. So some of these South-based banks, the Lakshmi Vilas Bank, Karur Vaishya Bank, they by purpose remain small because why would you want to grow? If you grow, you'll be nationalized. I think Arvind Subramaniam also mentions it that he could still understand this large scale of nationalization in industries and so on. But in '69, why would you nationalize banks in such a large way, disconnected kind of an event? But when one connects it to history, long history, then there is a case. But when you look at that 60s kind of a period and you see that things are not really working out, you really didn't have to. Maybe a couple of banks, yes, but not such a large scale.
Last question on South Canara Bank. Why didn't they protest more when they were nationalized? Famously, even the court case starts with R.C. Cooper, who's a shareholder in these banks. Why didn't the owners and promoters organize themselves better? Because, we have examples of this in the previous decades, right? There have been nationalizations, famously, of course, Zamindari abolition. They all kind of get together. These are relatively rich people with means, could have hired the best of lawyers, sort of fought this tooth and nail, made it a big campaign. But somehow it seems like the South Canara folks, I won't say they go along with it, but they don't fight it in the way one would have expected. Especially given that they weren't failing and they were doing well and they were doing all the things that the government ostensibly nationalized the banks for.
If you want to understand this question, not just South Canara banks, but even larger Bombay-based banks who definitely had more clout. But I think Indira Gandhi really didn't care for. I mean, it was just an ordinance and it was passed. She didn't, and I think the times were such that maybe they thought that protesting will not help. It will just land us into more trouble, because this is an ordinance, and like, how do you really, go around rejecting a presidential ordinance, and what do you do about it? I mean, I think that there was already this some kind of history of nationalization, and this is how it was done. So I don't know. I mean, why they didn't organize, and why? I mean, obviously, as you rightly said, there were these cases and so on, and some of these guys. But then, usually in these cases, the court might say that okay, the government may not have paid them properly or something. But even the court, those who even filed these cases, they didn't. The court only said that okay, I mean, it is within the constitutional thing that there's nothing written that you can't nationalize these things. Yes, maybe compensation matters, and that's where some disagreement happens, and then they revise the compensation term. So I think they did protest, but through the courts and so on, but not really going through the streets. And I think they were unhappy. Obviously, there are these TMA pie kind of statements. We were anyways doing what you wanted us to do. So why do you want to nationalize? And I think they were also kind of shell shocked by the decision, the way it came in, that somebody can really do this in such a large way without without the RBI, without any consultation process, without anything happening. Because with social control, if one looks at the social control, the National Credit Council and all that which had come up, they were trying to do things which the inclusive banking was supposed to do. So they were under the impression that we've kind of bought this problem. I mean, we've bought some time on this. I mean, and maybe it's not going to happen so quickly because they will allow the social control policy to work for some years, and then if that doesn't happen, so I think it happened so quickly that Morarji Desai resigned. I mean, and Indira
Yeah.
Gandhi forced his resignation, and then suddenly. So I think these things happen way too quickly for them to react and weigh and buy. You just realize that, oh, all these years we built these banks and they've
Yeah.
gone away.
Yeah, something to think about. Do you think something like the Air India reversal to Tata's will happen if we ever start reducing the control of state-owned banks? If we start privatizing them, do you think the family will try to get control back or try to buy it? Because now they're bigger than ever, given the educational institutions and everything else. Like they're still a very dominant business enterprise in that region.
I have my doubts because a lot of these families have completely lost interest for them to kind of pick up these things. So unlike the Tatas who had this airline experience, they set up Vistara, they were in agreement with Singapore Airlines, so they have not really given up their plans. I mean, all that history of deep pride. I mean, that pride is there, but unlike the others who continued, these guys
Just moved
once
on to
they
other things, yeah.
moved on to other things, so for them to take these things up is very difficult. But obviously, this idea of reprivatizing these banks, Viralacharya and several others have raised. In fact, the government has been in the couple of budgets earlier, they had said that they'll be looking at two public sector banks and reprivatize them, but that's still not off the table. So we have to see, I mean, how this kind of thing pans out. You kind of look at these sort of histories, you do see that I wish these banks had continued
Yeah.
in their avatar, and we would have seen a Dr. TMA Pai. I get goosebumps when I say this, but I think that legacy of TMA Pai and some of these guys is completely lost.
Yeah.
And we've not done anything to preserve it. We've not done anything to. So when some of these names come up of people who promoted inclusive banking and so on and so forth, we unfortunately none of these names come up. TMA Pai, TA Pai, Canara Bank folks, Corporation Bank folks. I mean, they all did some phenomenal, fantastic work, and the region as a whole, I think, it serves as an example of how do you do these things the right way. You don't need to necessarily get government and all these diktats. In fact, they create more trouble
Yeah.
because they don't understand these things. You have to facilitate these. So I think there's a lot of learning still in fintech and all these spaces, that how do you ensure that you don't over regulate these things and you allow private enterprise to kind of flourish.
I want to do one whole episode with you just on that, like how RBI might be. Is it too careful, or does it come to the party too late? But at least on South Canara, we have an excellent documentation of the history thanks to your book. Thank you so much for doing this. This was such a pleasure.
Thank you, Shruti. Thank you so much. I've been wanting to be on your show for a long time, and we've been talking about this. Though I've spoken about this book at multiple forums here, there, but this is like one of those cricket test matches. You have to go to one of those tricky pitches, and you have to do well there.
Please don't embarrass me. No, the book is great. And I have to say one more thing. It is the most readable book on banking.
Oh, okay. Thank you so much.
It's actually written exactly like you write your blog, which I think is extremely well written. And normally when you pick up one of these university press books on banking, like I just start with a sigh. Like I'm like, okay, here we go. But yours is actually really, really accessible.
No, I mean, a credit to the Manipal Universal Press. That's another story.
They're fantastic.
Because this book, I mean, they were very kind and they were sort of very open to the idea, because at the end of the day, it's that entire family which is behind all these banks. It's that whole process also. I mean, to get through these university press were very difficult. None of them were very interested to take this very niche topic.
Well, because your book is so readable, and I think the precondition for a university press book is that it is incomprehensible these days.
Okay. I take that as a compliment. Thank you so much.
No, absolutely. This is great, and I hope you come back and we can chat more.
Sure, absolutely. That goes without saying.
Ideas of India is produced by the Mercatus Center at George Mason University. If you enjoy this podcast, please subscribe on Apple Podcasts, Spotify, or your favorite podcast app. Help us grow by giving us a rating and leaving a review. Follow us on Twitter at @SRajagopalan and at Ideas of India. Also check out our initiative commemorating 30 years of India's market reforms at the 1991project.com.